Hello from Trend Signal for a review of the data and the events the week beginning the 8th of January 2018. Quieter week for data this week following the very busy first week back for 2018. Stocks really are flying out of the starting blocks, as it were. The stock pickers, economists, analysts, etc., all chancing their arm with predictions about 2018. But from my perspective, it certainly looks more polarized. The headlines seem to sort of sum it up in the Financial Times on Monday morning, with various articles suggesting it's going to continue to move sharply higher, and there is a lot of bumps in the road, and we could see some setbacks this year. So a bit of a mixed bag, really. As I said, becoming a little more polarized. Last week, FTSE was the one that sort of underperformed, really, a combination of I guess Brexit, a combination of strong sterling or relatively strong sterling, which is hampering certainly FTSE 100, which only managed 36 points last week, which is just under 0.5%. In comparison to the likes of the Dow, 576 points, the S&P 70. So these are all nudging 2.4, 2.6% gains. And the DAX, which struggled a little bit in between Christmas and New Year, posting 400-point gain last week, so that's 3.1%. And the Nikkei on holiday for most of last week, 949 points, most of it on the reopening on Thursday. Certainly a very positive move, up for just over 4%. So a very good start for global equities. The dollar, meanwhile, struggled a lot in the last couple of days of 2017 and got kiboshed last Tuesday, but certainly spent the rest of last week recovering somewhat. I think slightly better numbers from the US, and also I think the FOMC minutes last was it Thursday rather muddied the waters interest rate expectations. So that has had some effect on the dollar's fall, as it were, at the beginning of the year. Let's have a look at the markets. The data coming out this week, because it's a fairly light calendar, and that tends to happen after non-farm payroll, which was last Friday. Not a brilliant number, but they look at the sort of 3-month rolling average on employment in the United States, and it still remains very positive. Nothing that will upset any interest rate expectations. We're certainly not looking for any rate rise in January, that's for sure. Data this week, well, we don't really have anything until Wednesday, when we've got UK manufacturing, looking for a slightly better number out of the UK's manufacturing base, plus 0.3% compared to plus 0.1% last month. US crude oil inventories will always interest anyone trading commodities. Tends to have quite an impact on the market. We're back to the Wednesday release. It was released last Thursday because the day's holiday last Monday. Thursday, well, we have the producer price index from the US. This is sort of like a leading indicator for future inflation. It's the price of goods and services going into production, so it's regarded as a bit of a leading indicator for that. And then we have the real deal on Friday at lunchtime, consumer price index, or inflation, as we like to call it. The question's been asked, tight labour market, will that eventually lead to a pickup in or an acceleration in average earnings, which inevitably would stir inflation. But for now, the core reading that we're looking at in the United States, only up plus 0.2%, at least that's the expectation. And they exclude the sort of more volatile components from the regular number to create this core reading. So it excludes the likes of food and energy, which can be a little bit more volatile. Then we have retail sales at the same time, an important number in itself, but the US consumer and the US manufacturing and services sector is doing very, very well indeed. So I'm not surprised to see another positive number from the US retail sales, plus 0.5%, slightly less than the 0.8% released last month, but nevertheless, the US economy in a different stratosphere to that of the UK, for example. That's it. A fairly light calendar this week. Thanks very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.